This is Ghana's marketplace. Now to our first business story. Bank of Ghana Governor Dr. Johnson Isiama has announced that they will soon be rolling out some new measures targeted at strengthening the banks in the country. The move, according to the bank, will target the credit risks, liquidity and reserve requirements of commercial banks in the country. The Bank of Ghana Governor disclosed this at a meeting with managing directors of commercial banks in the country.
The Bank of Ghana will soon implement a consolidated set of measures that are designed to strengthen resilience, enhance transparency, and align our banking system with the highest international standards. This agenda addresses both the forward-looking reforms that will future-proof the sector and the immediate corrective actions needed to close existing compliance gaps. We will begin with credit and risk governance. In this direction, all banks will be required to identify and take firm action against deliberate defaulters to ensure that credit obligations are honored. A new credit risk management directive that is aligned with Basel principles will set minimum standards for underwriting, monitoring, and provisioning. Alongside this, we will introduce a bank assurance directive, which is meant to strengthen governance in bank assurance arrangements, risk, and we will introduce new guidelines on credit concentration to encourage greater diversification across loan portfolios. On liquidity and capital resilience, there's a forthcoming liquidity risk management directive which will mandate that banks hold sufficient high-quality liquid assets, enough to cover 30 days stress scenarios. This measure will also close loopholes that have allowed the artificial reduction of reserve requirements, including the misclassification of deposits as borrowings, and will clarify the treatment of e-money float accounts. We will also introduce a framework for managing interest rate risk in the banking book, strengthen capital planning through the internal capital adequacy assessment process, and embed more robust stress testing to ensure early detection of vulnerabilities.
In other development, commercial banks are still having challenges with adequate dollar supply to aid their operations. This is what Joy Business has picked up from some of these banks. There is more in this report.
According to some of the banks that we have engaged, the limited supply of dollars had affected trading activities on the interbank market. It has also indirectly impacted the rates, resulting in the cedi being fairly stable on the interbank market. One of the banks, for instance, told Joy Business that because some of their customers know they will not get dollars from them, they no longer come to the banks. We are also learning that the central bank has not been that heavy on the market when it comes to dollar supply. Additionally, the commercial banks have also revealed that for the third consecutive session, the Bank of Ghana has not been on the spot market when it comes to foreign exchange auction. We are, however, not sure for now how this development, if it does not improve anytime soon, could affect the current stability of the Ghana cedi on the market.
Now joining me in studio is the head of finance at Melbourne Capital, Nelson Kujo Kwagbeji. Now let's get to him and have more interaction, especially on what the governor had to say. The governor raised some serious concerns about credit risk assessment. What do you make of those remarks?
Thank you very much. Currently, the non-performing loans in Ghana within the banking sector is way above 20%. And when you are a country and your banking sector has a non-performing loans more than 20%, then it means that there is a serious problem within the banking system. And so what the Bank of Ghana intend doing is to make sure that credit risk and governance regimes are structured in such a way that we will cut down significantly on non-performing loans. In fact, the governor made mention of the fact that he wants to reduce NPL to 10% as by the end of 2026. The banking sector is the lifeblood of every economy, and we have seen it in the past. Due to the revocation of license of banks in the system, it has a ripple effect on other banks. So I think the credit and risk governance regime or directive that the Bank of Ghana intends bringing on board is to help strengthen the banking system and cut down significantly on non-performing loans.
It's interesting to say that he was kind of worried that most of the commercial banks are not responding adequately to the policy rate cut. What do you say to that?
Well, the policy rate itself is not the only factor that the banks take into consideration when they are fixing their pricing for credit facilities. They also take into consideration other factors. Now, one of the factors that they take into consideration is the reference rate. Now, the reference rate has been reduced to 19.6%. The banks, they are in business, and so the expectation is that they also add a margin. And so in the coming day, don't forget that the banks, they have also mobilized their loans at a very high cost. And so they cannot just cut down on their lending rate just like that. They need a time to readjust their portfolio so that their portfolios will be responsive to the new policy directive. But my issue is that banks are in business. And the funny thing is that the banks, they also buy loans from other banks. So if you are a customer of Bank A and I am a customer of Bank B, and the Bank A gives you a loan at 25% and I am giving loans at 20%, I can go and buy that loan from your bank and then I'll give you a facility at a reduced, interest rate. And so we will see the banks actually coming down, but that may not be immediate.
Great. Now, how bad is the dollar supply situation currently?
All right. We started the year with a gross international reserve of $8 billion, representing 4 months of import cover.
Yes.
As at the end of the second quarter, the Bank of Ghana has added $1.6 billion to the reserve, shooting the reserve to about $11 billion, representing about 5 months of import cover. In fact, as at the end of the first quarter, the Bank of Ghana pumped about $1.4 billion into the system. The Bank of Ghana has also given sufficient assurance that there is enough dollars in the system to meet the demands of those who actually need them. The problem of dollar shortage to me is artificial. Artificial because there are two reasons, in my opinion, that is actually accounting for, the shortage of the dollar. The first one has to do with documentation. Now, the Bank of Ghana is saying that before dollars can be given to any importer, the gentleman must submit his documentation covering the goods that the person intends importing into the country. Now, in the past, what happens is that the importers will go to the banks. They will tell the banks that they need advance. The banks will send, let's say, $600,000 to China. But when the goods come, the value that they will declare at the port is not $600,000, but let's say $100,000. So you see, there is capital flight. And at the same time, at the port, the government is losing out on revenue. So what Bank of Ghana is saying is that now if you want to import 100,000 worth of goods from China, submit the documents to the banks. The banks will come for auction, and then we will give the banks the money to be given to you. So I think that the shortage is principally due to documentation issues. It's the normal Ghanaian type of attitude. We are used to a certain way of doing things. Now there is a change. We find it difficult to adapt to the new change. Then the second reason why I think this issue of shortage has to do with hoarding. We are getting closer to Christmas. People need to import things into their country. And so they are keeping the dollars so that when we are getting closer to the beginning of the last quarter, then they can start selling the dollars at a high cost for those who need them to import into the country. So this issue of dollar, I think there is sufficient enough dollar in the system. The problem has to do with documentation, and also people are hoarding the dollar, targeting Christmas importation.
Are you also worried that at this possibly we have a strong reserve position as a country, however, is not rather reflecting on the market supply?
Well, it still bounced back to what I explained earlier. Yes, we have a very strong reserve base. People are still complaining that they don't have enough dollars. It's basically because of the documentation issues. I think that the dollars that we have is actually giving strength to our cedi. I mean, we have seen the relative stability of the Ghanaian cedi right from January to date. And so once the reserve is depleting, what it means is that our cedi will start coming down. The cedi will start depreciating. And so we just have to build on the reserve. We just have to build on the reserve, have enough reserve to support the cedi and also support those who are into international business transactions.
Per your assessment, why is it that government is currently struggling to raise funds on the T-bill market?
Well, it's simple.
Yes.
I mean, everybody wants to place his money at where he will get returns. We have seen that, for instance, if you look at this slide, 7th July 2025, the 91-day was at 14.57%. Currently, as at 11 August, it has dropped down to 10.20. Inflation is at 12.1%, which means that when you invest in a 91-day Treasury bill, you have a real negative rate of returns. When you look at the 182-day Treasury bill too, the same thing. For the 182-day Treasury bill, the rate has also fallen significantly. Now, it's also trading around it was at 15.02% July 7, but currently it is at 12.25%.
So the margin of returns has dwindled.
Exactly.
A period of between just June and July. Just in July.
So people are moving away gradually from the T-bill market. In fact, the last 3 auctions that we had, there was oversubscription. But the recent one that we had, there was under-subscription to the tune of 20%. What it means is that the rates are not interesting, and people are moving away from the Treasury bill market to other alternative sources of investment that can give them more returns.
What other alternative markets are available for those who like to push their money, considering the current situation in the T-bill market?
Well, in Ghana, we call something a thin market. Our market is very thin. What it means is that we don't have a lot of investment opportunities. In fact, elsewhere, we have derivatives, we have cryptos, we have all kinds of investment, vehicles that you can put your funds in. But in Ghana, you either do fixed income or you do the stocks. Recently, the stock market is doing very well. And so investors who are conservative, who don't like taking risk, they may say, okay, let me place my money here, irrespective of the fact that inflation is way above the returns. But within the market itself, maybe somebody can look at the stock market, where most of the stock, especially the telecommunication and the banking stocks, are doing very well. They are doing pretty well. That is another aspect. Somebody may also look at investment in real estate. But real estate is not like tomato, where you invest today and tomorrow you sell. And so it becomes a bit of an issue. And so these are some of the areas that somebody with an excess fund. We also have corporate bonds in the market. So these are some of the areas that somebody who doesn't want to go into the Treasury bill market. But you see, if you look at the fall in rates, it's good for the government actually, because one is going to cut down significantly on their interest payment. You remember during the mid-year budget, the finance minister made mention of the fact that they have reduced our total debt stock by 113 billion Ghana cedis.
Yes.
It's also partly due to the reduction in the rate within the money market.
Indeed, you've seen the recent pension reports, and it tells you that most fund managers are moving their investment out of that portfolio. What is your assessment of that? Well,
I am in the investment banking sector. It is even projected that by the end of this year, pension assets will hit 100 billion Ghana cedis, which means that we'll have a lot of liquidity in the system. And when you look at the guideline issued by the National Pension Regulatory Authority for Tier 2 and 3 fund managers, we are to invest, or we may invest up to 75% of our AUM in government securities. Now, when you look at this particular chart, you realize that most of the attention is on the 91-day Treasury bill.
Yes.
And this is actually largely due to institutional investors, pension fund managers, insurance companies, and banks. To the extent that pension fund managers are moving gradually because the rates are not interesting, it's going to affect government refinancing, mechanism. And if you look at the Ghanaian economy, where else would the pension fund managers place their money apart from, the short-term market? So it's a bit of a problem, because if you look at the market, there is no better alternative source of investment where, pension fund can place their excess fund. The only thing for the banks is that the banks don't have any option now than to return to their core mandate of giving loans. In fact, when you check banks' balance sheet, you realize that most of them, they are tilted towards government securities. And so you have so much in government securities and little in investment. But now that the Treasury bill rates are coming down and lending rate is around 20% thereabout, the bank will be forced to go back to their core mandate of supporting the private sector through their lending activities.
Finally, does it have a way of reflecting on the CD stability? We've seen the T-bills, we've seen the shift in investment, we've seen the pensions trajectory, all of this, that dynamics, will it affect the outlook on keeping the CD stable?
Well, the stability of the CD is largely due to the quantum of reserve that we have. And to the extent that we continue to build our reserve, to the extent that the Bank of Ghana is enforcing the FX regulation, we expect the CD to remain stable. However, the Treasury bill rate is a benchmark rate that determines in one way or the other interest rate, especially lending rate within the economy. And to the extent that Treasury bill rates are coming down, the expectation is that lending rate will also fall. In fact, I overheard the governor saying last week that banks should be ready to start lending at a single digit, which means that if the rate continues to fall, which the finance minister actually indicated in the mid-year budget that he will make sure that the rate goes down further. So when the rate goes down further, what will happen is that people will continue to reject the T-bills, okay? The banks will continue to reject the T-bills, but rather revert to their core mandate and lend to the private sector. And when the lending goes to the private sector will expand, their revenue will increase, government will get tax revenue instead of going to the short-term market to borrow from the short-term market.
Thank you very much, Nelson, for this in-depth analysis of the T-bill market and how this is impacting investment in Ghana. So I have been speaking with the head of finance at Melbourne Capital, Nelson Kujo Kwagbeji, and that has to do with understanding the financial sector as of now. Now, moving on, the Fitch Solution says the sustainability of Ghana's macroeconomic recovery remains highly dependent on persistently high gold prices. It cautioned that any drop in global prices of the commodity could affect projected stability of the Ghana cedi in the future. The following report has more.
According to the UK-based firm, a sharp decline in gold prices, for instance, triggered by a de-escalation of geopolitical tensions, would significantly reduce Ghana's dollar earnings and deflate its international reserves, placing renewed pressure on the cedi. In its analysis of the Ghanaian economy, Fitch said a substantial decline in gold prices would drive a sharp rebound in inflation. This will prompt the Bank of Ghana to maintain a tighter policy stance than currently anticipated. It, however, said it does not expect lower interest rates to put pressure on the exchange rate. According to the UK-based firm, although in theory, lower interest rates could reduce the attractiveness of cedi-denominated assets, real interest rates will remain comfortably positive. This suggests that the easing cycle is unlikely to prompt capital outflows.
Now, the Global Conference on Human Resources in Africa, in partnership with the Society for Human Resource Management, has launched the E-Square Initiative, the initiative for the Education to Employment pipeline to address gaps between academia and industry. The program seeks to better align graduate skills with workforce demands across the continent. Details shared in the following report.
Under the theme, Building the Education to Employment Pipeline, Synergies Between Government, Academia and Industry, the E-Squared initiative aims to close the gap between academia and industry by aligning educational resources with the right workforce needs to enhance productivity. Speaking at the event, Head of Government Affairs and Corporate Secretary at the Society of Human Resource Management, Emily Dixon, stressed the importance of a more robust education system that addresses industry demands.
We have more jobs than people to fill them. And it's not that we don't have the bodies. We don't have people with the skills that are needed for those jobs. And so there's a lot of investment necessary in reskilling and upskilling. But that seems counterintuitive. If you have an education system, shouldn't people be coming to the workforce with the skills you already need? So we worked on this E-Square initiative so that our education pipelines, which now we say are leaky, busted, and broken, can actually become more secure and better for our workplaces so we can get talent in the workplaces with the skills that are needed in those workplaces.
Minister for Labor, Jobs and Employment, Dr. Abdul Rashid Pelpo, noted that Ghana's curriculum is evolving to meet the changing needs of the global economy, ensuring that graduates are competitive internationally.
It's becoming very clear that the kind of education we run is short of the total requirement of input into our job market. More and more there's transformation in the economy, there's more practicality in the economy, more investment in areas where we need to use our hands and our heads. And so practically we are moving towards that situation when the trades education will become more enlarged in our curriculum.
Labor consultant and CEO of Game & Game, Austin Game, underscored the critical role of data from the Ghana Statistical Service in shaping both academic programs and labor market policies.
Africa is what it is, Europe is what it is because they collect this data, and we found it necessary from their end to ensure that we have it as an input into the labor law. Section 6 of the labor law enjoins that we should create space for all employers every quarter to submit data, and this will be analyzed and inputted into the system so that the universities cannot teach without that data. Employers cannot plan without that data. Government cannot plan without that data. That's the way it's supposed to go.
The E-Squared initiative is part of a broader commitment by the Global Conference on Human Resources in Africa and the Society of Human Resource Management to drive workforce productivity and foster collaboration among key stakeholders in government, academia, and industry across Africa.
That's all for today's edition of The Marketplace, coming to you live on the Joy News channel. Now, you can go to myjoyonline.com/business, and you go there, you see Bank of Ghana target credit risks, liquidity and reserve requirements of banks in new regulatory measures. Insurance industry total investment asset declined slightly in 2024, with insurance dominate investment holdings. And so this is where you get more insight on what is happening in the world of business. Thanks for watching. My name is Winston Taki. Have a good business day. Bye-bye.